and welcome. This is the Market Trap. I'm Agam Vakil, where we've seen the benchmark indices snap a three-day gaining streak with the Nifty declining by as much as 25 points. The main reason behind this weakness, at least as far as the Nifty is concerned, is the pharma names. We've seen deep cuts coming in. Dr. Reddy's, Cipla and Sun Pharma also joining the declines here. We've seen weakness in Tata Motors and Indiabulls Housing Finance. On the gaining side, we haven't seen too much. ONGC and of course Eicher Motors up as much as 1.4%. But it is the broader markets where the cuts have been much deeper. Let's talk about the Nifty 500. When it comes to the advanced decline ratio, we have one gainer for four losers. And Federal Bank and KRBL are of course declining on earnings. KRBL was a surprise where we saw a decline on a year-on-year basis for the revenues as well as profitability. Indian Bank following, not too far behind, and of course Reliance Communication and Balrampur Chini also taking severe cuts. Adani Transmission and Welspun India on the gaining end. Again, this is on the back of earnings, and well, some reversal coming in the IT sector. That's the mid-cap IT sector, so Hexaware and Sign moving in, and some gains coming in for Future Consumer as well. In fact, the Future Group, I will address that a little later today. But let's get in perspective of what's happening in the markets. We have Neeraj Shah joining us. Neeraj, the broader markets have been a little bit of a concern now. Yeah,
and today more so, Agam, because I was just looking at what you were pointing out. The reds have 10, 11, 9, 8, 7%. Look at the greens, it's a measly 3, 4, 5%. Right. So it just shows that the market breadth was bad. Two, there was no meat in the gainers. People were not pumping in good money into the gainers. So while we may argue that we are in a state of consolidation because the Nifty is not cracking and 8-9 days we're still holding above, I mean, whatever your crucial level is, 10,550, 10,580, whatever your chart may be. But look at the broader end of the spectrum. Select stocks have corrected. Sterlite Tech, for example, the last few days I've been noticing that strong quarter, strong management commentary. The stock has fallen from, what, 360 all the way down to 315 today. So there is some serious pressure at the broader end of the spectrum. Don't quite know. I mean, you would have a better sense of what's happening in the F&O space, but don't quite know if it's really on account of the nervousness ahead of Tuesday or just the fact that the market seems to be saying that not everything is hunky-dory. Rupees slid down a bit. Crude is at a high. Global uncertainty is right out there. We have the Karnataka election verdict coming up as well. And Q4 hasn't been as spectacular because of banks, yes, but hasn't been as spectacular. Sure. So multiple factors at play.
Well, actually, to a certain extent, you have addressed what has been ailing the markets because we're starting to get some bad earnings now, which may be bearing down on the broader markets. But again, we'll have to wait and watch for those cues. Of course, a big election coming up as well. Thanks, Neeraj, for joining us and giving us some perspective.
Thanks a lot.
But that said, in terms of technicals, what levels are we keeping an eye on today, even as we see the Nifty edge back downwards? This is what our technical experts have to say. Listen.
The important level to watch out going forward would be 26,400, 26,450. So we are expecting Bank Nifty to expire all about near 26,300. But any declines in Bank Nifty again becomes a good buying opportunity. The bigger trend which was down as long it was below 2,500, that has seen a significant change, and now we can expect a rally of at least 1,000 points if that 26,400 is taken out. So I would be watching out 26,400 quite closely on a closing basis.
As long as 10,700 is intact on the futures, there can be even a upside breakout. So one should just trail the longs with a stop loss below 10,700 for now.
So as we pointed out, there were very deep cuts for banks like Federal Bank and Indian Bank, of course, largely on account of earnings. We have Shraddha Babla joining us to give us an idea about what's really gone wrong for some of these banks. Shraddha.
So Agam, for Federal Bank, despite the fact that the profit misestimates and the gross NPA shot up to 3%, the slippage is more than doubled on a sequential basis. What also seems to have disappointed the street was the weak operating performance, and in addition to that, about 54 crores of residual unamortized gratuity provision still needs to be made, which will happen over FY19, which means that the cost will remain high in FY19 as well, and hence we saw shares dropping to the most in over 2.5 years. On the other hand, we had a loss before tax of about 383 crores for Indian Bank. Why so? One, we did see the impact of RBI circular, which led to higher slippages and hence higher provisions, and the bank also reported a gross NPA divergence of about about 544 crores for FY17, and all of these numbers are despite using the provision of RBI to spread those bond losses. So not surprising to see the kind of reaction with that we saw from Indian Bank, which was supposed to be or believed to be at least a relatively better performing PSU bank.
Right. Thanks, Shraddha, for joining us. Of course, we continue to track developments when it comes to some of these banking counters, mixed earnings coming in through. We've actually had a brokerage note today, and I'm going to address the retail sector. This time around, it's Avenue Supermarts. We all know that the stock has been trading at a substantial premium. We also know that it is enjoying, to a certain extent, a scarcity premium, given the fact that a large chunk of its ownership is still with the promoters of the company. That said, when it comes to concern and time to time on valuations, we evaluate what's going on with the company. And for now, we've had a brokerage note on Avenue Supermarts suggesting that it is overvalued. So we have a Citigroup note coming, and they're initiating coverage on Avenue Supermarts with a sell with a price target of around 1,255, which is not too far away from the price target of the Bloomberg consensus, as you can see here, of 1,257. And the Bloomberg consensus seems to agree with the Citi note too, because we have 8 of the 15 odd analysts which have a sell rating on the counter, and just 5, that's nearly a third of these analysts with a buy out here. So Avenue Supermarts essentially based on valuations, not necessarily fundamentals, which seem to be very sound. But for all those who are cautious on Avenue Supermarts, they're only talking about valuations and the price to earnings multiples, or for that matter, all the multiples they are currently trading at. That, of course, Avenue Supermarts eventually closed the day in the green. But speaking about stocks which have advanced in trade today, we've seen some strength coming in the future group stocks. So Future Lifestyle, Future Consumer, as well as Future Retail have advanced in today's day of trade. And the one reason is on the back of the big deal that we saw come through yesterday in Walmart and Flipkart. We have reports suggest that Kishore Biyani is now in talks with some of the global retailers to sell 10% stake in the group, and this could, of course, likely involve Future Retail, Future Lifestyle, or for that matter, Future Consumer. This, of course, is a report, and we need a little more confirmation and perhaps more details, but this is certainly improved sentiment for some of these companies, and that's the reason why we've seen gains in the future group stocks. But that said, it's a wrap on the markets, but don't go anywhere. Lots more lined up, so stay tuned in a Bloomberg Quint, and we'll keep bringing you more.